In this video, we're going to be talking about Tesla and why today is very important for Tesla. We're also going to dive into the factors that come into play to drive share prices, in particular, the possibility of index-related events. This is really interesting because, as you'll find out, the larger the amount of money that tracks a certain index, the larger any changes that may come about will impact stocks within the index. Hi, I'm Erika Kullberg. I'm a lawyer, and on this channel I cover personal finance, things like investing and passive income. Diving right in, Tesla is going to report its second quarter earnings after the US market close on July 22nd. And there are many reasons why this particular earnings report is going to be more important than the rest. We all know that Tesla has been one of the best performing large cap stocks so far in 2020. You can make an argument that perhaps these returns are driven by fundamentals, which basically means higher expectations for more orders of electric cars. But the more interesting factor is actually the impact that passive investing can have on share prices. Now remember, passive investing involves buying ETFs that mimic a certain index, for instance, the S&P 500 or NASDAQ. The way I want you to think about ETFs that track an index is that they're basically very simple rule-following algorithms that are meant to track the methodology of the underlying index. This means that if the S&P 500 goes up 10%, and that's what we want to track, we'd want to buy an ETF that mimics the returns of the S&P 500 as closely as possible. Each index has rules. These rules determine how big of a weight these stocks are actually going to have in the index. As an example, it could be market cap weighted like the S&P 500. For the S&P 500, if you're the largest company in the S&P 500, you have more weight than the smallest company in the S&P 500. As an example, at the moment, the three stocks with the highest weighting are Microsoft, Apple, and Amazon. Together, they account for roughly 17% of the index. That's what market cap weighted means. If you want to buy, say, $100 worth of S&P 500, you'd need to buy $17 worth of those three stocks. Now, Tesla is currently not a member of the S&P 500, which is odd because at the moment, if it were included in the S&P 500, it would be the 9th largest company within the index by market cap. The reason it's not yet included is because the S&P 500 has a really strict set of rules that need to be passed in order to qualify for the index. This is called having an index methodology. One of those rules is that the company, prior to being included in the S&P 500, needs to have 4 straight consecutive quarters of profitability. There are many other rules that dictate whether a stock qualifies for inclusion, and if you're interested, I'll put a link in the description below for a full note of all of the rules for S&P 500 index methodology. For simplicity's sake, let's just focus on the 4 straight quarters rule. As of now, Tesla has had 3 straight quarters of profitability, and if they're able to exhibit a 4th straight quarter of profitability, there's a higher probability that they would be included as part of the index. Now, here's my point about why this is interesting. There are roughly $11 trillion that track the S&P 500 index. This includes ETFs, index funds, and even active managers that have S&P 500 as a benchmark. Assuming that Tesla market cap stays around where it currently is at $300 billion, we can assume that if included into the index, it'll have a greater than 1% weight in the index. The exact calculation involves other more complicated factors, but we can just assume its weighting will be more than 1%. So, given there are $11 trillion that track the index, and taking into account free float, this amounts to over $50 billion of new demand. That means you'll have over $50 billion of passive money that will be forced to buy the stock at a certain date and time in order to maintain their tracking of the index. To put this into context, Tesla stock trades on average $8 to $9 billion per day. This $50 billion accounts for over 5 days worth of stock that would need to be bought for these simple rules-following strategies at a certain date and time. As a really simple example to help you understand how this works, say you have a friend who is forced to buy $500 worth of stock on a particular day at a particular time, regardless of the circumstances, in a stock that trades only $100 a day, and you happen to know this information. Your natural instinct is probably going to be to want to buy that stock ahead of the event. This is something very important to recognize because a common hedge fund strategy is to play these index events. Because think about it, just like you have information about your friend who needs to buy the stock, In this case, you also have information about when these benchmark strategies will need to buy the stock in order to follow those rules. That's why today's earnings release is so significant. So how much has already been priced in, meaning how much have people already anticipated this event? Given Tesla's extraordinary returns this year already, it's really difficult to tell what has been priced into the stock. First, like we already talked about, Tesla's had 3 consecutive quarters of profitability. Investors know that to qualify for the S&P 500, you need 4. So maybe investors have already taken this into consideration, which has driven the share price higher. Another thing that could have driven the share price higher is the number of people that have been short the stock. Data suggests that over 20% of daily volume is currently in shorts. If you short a company, you think the stock's going lower. But remember, if the stock continues to go higher while you're short, you're losing money and may need to buy back that stock at a worse price than what you shorted. You're effectively being forced out of a position, which also counterintuitively could have driven the share price higher. This is also called a short squeeze. Clearly, as you can see, investors have gotten the view that the stock is going lower wrong, but this is another factor that you have to consider when thinking about whether to invest in a company. Also, Tesla is currently the 8th most popular held stock in Robinhood, with close to 500,000 accounts that currently hold the name. You can say with a fair amount of certainty that Tesla is very well liked by retail, and this could also have been a driver for the recent surge. FOMO is real, like I talked about in this video. Finally, this may be in addition to point 3 for why retail investors like Tesla. Another factor to consider for the recent surge may be a fundamental view on the company. You just think the company is going to do well in the future. In my opinion, considering all of these factors, fundamentals are probably the least likely driver at the moment. So again, there are so many factors that drive share prices that are very difficult to pinpoint. But what we do know is that earnings will be coming out on July 22nd after the market close, and we do also know that the results may have a material impact on whether or not the S&P 500 decides to include Tesla in the index. And if that happens, it'll result in a lot of new demand to buy the stock. In fact, probably around $50 billion worth of demand. So the reason I bring this up is because there are a lot of moving parts going on here and no clear answers. But investor positioning, in other words, why investors are buying and selling stock and for what purpose, whether it's for an index event like inclusion or fundamental views, is something you have to consider when making decisions about whether or not to buy or sell stock. I'd love to hear your thoughts on if this is something you've considered in your investing strategies. Just let me know in the comments below. And if you want 2 free stocks, one valued at up to $1,400, then you can sign up for Webull using my link below and deposit $100 and you'll get those 2 free stocks. And I talk about how in this video here, so I'll see you there.